Most people think raising your credit score takes years, months at minimum. I had someone sit across from me recently, a first-time buyer, and she said, I was told that I needed to wait 2 years before I can buy a house. 2 years. She was 22 points away from qualifying. Just 22 points. I helped her fix it in 11 days. And I'm going to show you the exact same strategy right now. So quick heads up, if you're watching this and you're serious about buying a home, there's a link in the description to book a free strategy call with me. And I'm going to look at your situation personally. All right, so here's the thing nobody explains about your credit score. It's not one big mystery number. It's actually 5 ingredients, like a recipe, and every ingredient has a different weight. Payment history is 35%. That's the biggest chunk. Just whether you pay your bills on time. Amounts owed is 30%. And this is the sneaky one because it's not just about how much total debt you have, it's about how much of your available credit you're using. That's called your credit utilization ratio. So think of it like a gas tank, but in reverse. You want it as empty as possible. Length of credit history is 15%. New credit is 10%, and credit mix is 10%. Now here's the insight most people miss. The 2 categories that make up 65% of your score, payment history and amounts owed, are also the 2 you can impact the fastest. The other 3, those take time. You can't fake a longer credit history. So we're going to focus our energy where it actually moves the needle, and I'm going to give you 5 specific moves ranked from good to this one is almost a cheat code. Move number 1, pull your credit reports and hunt for errors. Go to annualcreditreport.com. It's free. You'll get the reports from all 3 bureaus, Equifax, Experian, and TransUnion. Now here's why this matters. Errors on your credit report can lower your score by 100 points or more. One of my clients had a collections account showing on his Experian report for a medical bill that he already paid 3 years ago. It was dragging his score down by about 80 points, and he had no clue. So when you pull your reports, you're looking for anything that seems wrong. A late payment you know that you paid on time, an account you don't recognize, a balance that's just way off, a collections account that should have been removed. But if you find something, dispute it directly with the credit bureau. All 3 bureaus have online dispute tools. Write down what you find. If your credit reports look clean, great. You just eliminated 1 variable. If they don't look clean, congratulations. You might have just found the fastest path to a higher score. Move number 2, pay down your credit card balances. I know that sounds obvious, but the strategy here is not obvious at all. Remember that credit utilization ratio I mentioned earlier? Well, here's how to calculate yours. Take your credit balance on a credit card, divide it by your credit limit, and multiply that by 100. That's your utilization percentage. So if you have a card with $5,000 limit and you owe $2,000, your utilization is 40%. That's too high. Lenders and credit bureaus like to see you under 30%. And honestly, the people with the highest scores even keep it under 10%. Here's the decision rule though. Go look at every credit card that you have right now. If any single card is above 30% utilization, that's your priority. Pay that one down first. If you can get every card under 10%, even better. And here's a pro tip that a lot of people don't know. It doesn't just matter what your total utilization is across all the cards. It matters per card. So if you have 3 cards and 1 is maxed out while the other 2 are empty, your score is still getting hammered. Spread it out or pay it down. This single move, reducing utilization, can sometimes boost your score 20 to 30 points in 1 billing cycle. And that's not a typo, 1 billing cycle. Now, what I'm about to tell you next is the part most people never hear about. And honestly, I think it's the most powerful tool in this entire video. But first, move number 3, because you need this context. Stop opening new credit accounts. Every time you apply for a new credit card, a store loan, a car loan, that creates what's called a hard inquiry on your credit report. Each hard inquiry can drop your score by a few points. That doesn't sound like much, but if you applied for a department store card to get 15% off, and then a new credit card the next week, and then when you're car shopping, you could be looking at like 15 to 25 points gone, just like that. So here's the rule. In the months leading up to buying a home, do not apply for any new credit. None. No store cards, no credit cards, no financing furniture. Actually, I want to tell you a quick story. I had a client last year. This blew my mind. He was pre-approved. Everything looked great. He was 2 weeks from closing on his first house. Then he went to a furniture store and opened a store card to get the discount they give you. Well, his score dropped 18 points and it almost killed the deal. We saved it, but barely. So let me be very clear. Do not finance anything new until after you close on your home. Not a TV, not a couch, not a car, nada. So here's move number 4. And this is where it gets really good. You could actually call your credit card companies and ask for a credit limit increase without them running your credit. This sounds too simple to work, but if you think about the math, like if you have a card with $3,000, a $3,000 limit and a $1,200 balance, your utilization is 40%. If you call and they bump your limit to $5,000, well, suddenly that same $1,200 balance is only 24% utilization. You didn't pay a single dollar of debt. Your utilization just dropped 16 points, and your score can respond to that one billing cycle. The key detail, when you call, specifically ask, can you increase my limit without a credit inquiry? If they say yes, go for it. If they say they need to pull your credit, just politely decline and try a different card. This is free. It takes 5 minutes, and it's genuinely one of the most underused credit moves I've seen. If you want help figuring out exactly which one of these moves applies to your specific situation, book a free strategy call with me. The link is right below this video. I'll look at your numbers and I'll tell you exactly where your biggest opportunity is. All right, move number 5. This is the one I promised you. This is the one that's almost a cheat code. It's called a rapid rescore. And here's what it is in plain English. When you pay off a balance or fix an error, your credit card company or the collection agency takes 30 to 60 days to report that update to the credit bureaus. Your score just sits there, stuck, even though you already did the work. A rapid rescore compresses that timeline from 2 to 5 business days. Your lender submits proof of the change, like updated account statement showing a $0 balance, directly to the bureaus, and they update your report almost immediately. Here's the catch. You cannot do this on your own. Only a mortgage lender can request a rapid rescore on your behalf. You can't call the bureaus yourself and ask for it. This is why working with a good loan officer matters so much, because a good one will look at your credit, tell you exactly which accounts to pay down, tell you how many points you'll likely gain, and then rapid rescore the whole thing in a few days. I've seen rapid rescores move 40, 50, even 80 points when there was a clear issue. Sometimes there's a paid collection that I hadn't reported yet, or maybe just high utilization. Matter of fact, I did a rapid rescore on my own home when I purchased it. So let me be real though about who this is for and who it's not for. So if your credit is 15 to 40 points below where you need it to be, you've already made changes that just haven't been reported yet, rapid rescore is a game changer. If your score is low because of multiple recent late payments or an active bankruptcy, rapid rescore won't fix that. It only speeds up the reporting of accurate positive changes. It doesn't erase legitimate negative history. Here's your simple decision tree. So if you've already paid down your cards or fixed errors, but your score hasn't budged, ask your lender about rapid rescores. If you haven't made any changes yet, go back to moves 1 through 4 first. Do the work, then use rapid rescore to get your credit up faster. Now, let me give you the actual order of operations, because doing these steps in the right sequence matters a lot. Step 1, pull your report at annualcreditreport.com. Look for errors. Step 2, calculate the utilization on every single credit card. Take the balance divided by the limit times 100. Write those numbers down. Step 3, pay down any card above 30% utilization. Get them under 10% if you can. Step 4, call each credit card company and request a limit increase without a hard pull. Step 5, once you've done all that, connect with a loan officer and ask about a rapid rescore to get those changes reflected in days instead of weeks. Oh, one more thing that nobody talks about. The score you see on Credit Karma or your banking app, that's not your mortgage score. Credit Karma shows a Vantage score. And in 2026, that number can be 40 to 60 points different from the FICO score your mortgage lender actually uses. I've had people walk in thinking they have a 720, find out their mortgage score is a 670. That's a completely different loan. So don't panic if that happens. But also, don't assume the number on your phone is the number that your lender will see. The only way to know your real mortgage score is to have a lender pull your credit. Yes, it's a hard inquiry, but here's the good news. If you're rate shopping for a mortgage, all the inquiries within a 45-day window count as one single inquiry. Look, your credit score is not a life sentence, and it's a snapshot, and snapshots can change. I've watched people go from, I can't buy a house, to I'm closing next month in like 60 to 90 days, just by doing the 5 things I laid out in this video. If you want me to look at your specific situation and map out exactly what to do for free, book a free strategy call. The link is in the description. And if this helped your situation a little more clearly, hit subscribe so you do not miss what's coming up next. I got a video on what most first-time buyers get wrong about pre-approvals. And honestly, I think it might save you some time from the from the same furniture store disaster that I just told you about.